Hey everyone, Credible Crypto here. And so I wanted to make this macro video update on the BTC market and the crypto market as a whole. And I'm going to talk about, so I've had quite a few people now ask me in reference to Alessio Rastani's video update. Alessio is a YouTuber who makes video updates on crypto. He's been doing this a lot longer than I have, I believe. And he brings up some valid points, and I know that he's proposed both the bearish and the bullish scenarios for a scenario in which we have actually bottomed out, and then also a scenario in which we haven't bottomed out. So when I make this video, I'm mainly addressing his most recent video in which he talks about the bearish possibility that we haven't actually bottomed out, and that we are making a larger B wave correction in a bear market before another C leg to the downside. Now, keep in mind, as I said, I know he has also made videos on the bullish side, and so I'm not trying to say that that he believes that we haven't bottomed. And in fact, I believe he's going to be making another video to talk about whether he believes we have bottomed or not, based off of the prior videos that he's made showing both possibilities. So don't take this video as a criticism of his work or anything of that nature. It's simply a response because I've had a lot of my followers sending me his video link and asking me what I think about that video. So this is just a response to that. If you guys haven't checked out Alessio Rastani's channel, I highly recommend it. Yeah, let's just jump right into it. So the two possibilities that are discussed in his video, or the bearish possibility in this case, because it is a video on the bearish possibility, is that in the macro perspective, if we haven't bottomed out yet, then we are making a larger ABC correction to complete the actual complete correction for this bear market. All right. So in a typical Elliott wave perspective, we typically get a larger 5-wave move to the upside followed by a 3-wave correction. If we go to the log chart, our 5-wave move essentially culminated. The idea is that it essentially culminated here, and that we're now getting an ABC correction to correct the entire complete 5-wave cycle from the lows of Bitcoin, right, since inception essentially. So my macro count is a little bit different than that, but basically I'm going to talk about what I see as whether this is possible that we're getting an ABC. And why or why not I think that it's likely or unlikely, right? So let's start off with the idea. The idea being that this B wave can first travel to a 50 or 61% retracement, which is typical of the initial A wave to the downside. So our A wave, if we measure it out here with a fib tool, let's go ahead and go with the default. We can see that a 61% retracement would fall right here at about 13,500. All right, that would be the 6.618 retracement level, which is typical for a B wave, and that would be our initial target for rejection. Right above that, we're looking at a possible, we could go above these highs for a running flat correction essentially, or we could go closer, higher than the 0.618. Really, we can go any height here before correcting down for our C wave in the bearish scenario. All right, and then what would happen is we'd reject and we'd see another leg down to clear these lows here at 3,000, and then actually bottom out with the real low here between 0 to 3,000, somewhere in that vicinity. All right. So that is the bearish scenario, that the only bearish scenario, frankly, that has us making new lows or has us not having already reached the bottom of the Bitcoin bear market. All right. The other scenario, which is the one that I lean towards as the most viable scenario, is that the correction is now complete. It was some sort of a complex correction, some sort of a WXY or WXYXZ or whatever it was. But my belief is that the Bitcoin bear market bottom was here at $3,000, and that we will likely not see this level again for a period of years or maybe ever again. At the rate that we plan on moving up from here. So my belief is that we did bottom out at this level right here at 3,000, and we've now started the first impulsive wave of 5 to the upside. All right. Now, the reason that I think that is the case is that if this was a B wave coming up here, a B wave has to be within itself has to be some sort of a 3-wave structure. So for this to be a B wave, we'd have to see some sort of a 3-wave move to complete this B wave structure. All right. And within this 3-wave move, the A leg and the C leg should both be made up of 5 waves to the upside, generally, all right? 5 waves to the upside, and then a B wave, and then another 5 waves to the upside for this C wave, okay? Alternatively, the A, B, and C could be, I don't want to get too much in this, I don't want to complicate things too much, but it could be a WXY, which is just another type of correction, that instead of a 5-3-5 has a 3-3-3 wave structure. So then it would be, it would have the W would have a 3-leg structure, the X would have a 3-leg structure, and the Y would have a 3-legged structure. That's another possibility, all right? So what we're looking here for is essentially for some sort of a 3-legged or 5-legged move to kind of determine our expectations for where we're headed, right? So again, if this is, I'm going to keep things simple. If this was a B wave, we're looking for, to keep things simple, a 3-wave move, all right? Now what I'm seeing here off of these lows looks to me like the makings of a very clear, extended, impulsive 5-wave move, not a 3-legged move, all right? And so the way that I'm counting this right now is we have our low, we have our initial move up off the low, so we have this as our first leg, all right? Then we have this correction as our second, we have this as our third, this as our fourth, and we're working on our fifth and final leg for this major leg 1 impulse to the upside, all right? And within this third leg, so each of these legs, the first, the third, and the fifth, has to be subdivided into 5 waves as well. So with this third wave, we can see a subdivision as such. Let me go ahead and change the color on that, and we'll go ahead and make it a smaller degree. So within our third wave, we got that 5-wave subdivision, 1, 2, 3, 4, and then 5. We got our larger fourth wave here, and we're making our last 5th wave to the upside, which I believe will cap out at 11.8 thousand. So I'm going to go ahead and mark that off. All right, so this will be our the level that I think this 5th wave is going to end at. And so this looks like a clear 5-wave move to the upside to me, right? And that means a couple of things. First, that means that if this really is some sort of a larger corrective B wave, all right, it needs to be made up of more than just one 5-wave move. A correction can never be made up of just one 5-wave move. So for this to really be a B wave, it would indicate that after this first 5-legged move up, we may retrace, but we should get at minimum one more leg to the upside for this corrective B wave to complete before we head down for the larger C wave. Okay, this is the bearish scenario, right? So what that tells me is that even if somehow this is the bearish scenario playing out, we still have a ways to go to the upside because we're just completing our first 5-legged move here. We need at the minimum a corrective wave and then another leg up to get us 3 legs for the correction before we can continue down for our impulsive C leg or our corrective C leg to the downside, right? So right off the bat, I'm quite bullish because of this 5-legged move, all right? Now the other option, which is that we are actually at the start of a new bull run, is that this is the first wave of 5 to the upside, okay? And so that would mean that this is going to look something like this. And Alessio pointed this out as well as the bullish scenario would be that we're making a larger 5-wave impulse to the upside to new highs. Okay, that's the bullish scenario. And within that bullish scenario, we have our first 5-legged move possibly completing here. We'd expect a pullback, and then we'd expect to break that and then continue on to new highs. All right. So the bottom line is whether or not it's a B wave or a impulsive 5-wave move, we should, even if we rejected 11.8, we should retrace and then continue higher for at least one more leg to the upside. All right. So midterm, 100% bullish, no doubt about it. Short term, I think we may get a pullback as we approach 11.8K, but we'll talk about that in a little bit. So that is the bullish versus the bearish scenario, all right? The other reason why I lean towards this being the start of a major bull run as opposed to a corrective move is because of how all the other altcoins look at this point in time, all right? So Bitcoin one could argue is making a larger ABC because we didn't get that longer period of accumulation there. So one can argue that we are making a larger ABC. But when we look at other coins like Ethereum, for example, the wave structure is quite different from the wave structure on Bitcoin. And Ethereum, for example, is also making a 5-wave move to the upside, but it needs to, again, I don't want to make it too complicated, but it's making a series of 1-2-1-2s, which if you're familiar with Elliott Wave, the implication of that is that we are these waves are waves of a smaller degree within this larger trend to the upside, right? So this 5-wave move on Ethereum, for example, is really just getting underway, and it's likely going to take us above 400, above 500, and a lot higher before it's complete, because we have the initial first wave, the initial second wave, and then within this, we're still working on this larger third. Then we need to get a fourth. Then we need to get a fifth to the upside before this first wave can complete. And remember, in a corrective wave, we need at least 3 corrective waves. So for Ethereum, that means that after this first 5-wave move completes to the upside, we would still need to see a corrective B wave to the downside, and then another 5-wave move to the upside that will take Ethereum maybe even to the $1,000 plus range, right? So although Bitcoin looks like it could be reaching a top at 11 or 13,000 or something like that, many of these alts will be traveling a lot higher in the days and weeks to come before we can see any sort of significant correction on them. We take a look at Ripple. Ripple is, if you guys have been following me on Twitter, you know it's one of my favorite coins right now as far as upside potential goes. Ripple has just formed an absolutely perfect accumulation bottom here. We've been, let me see here if I can find a, let's see if let's see if we can find it here. Let me see if I can turn the volume on. There it is. So the volume is the volume profile is very clear and very apparent that Ripple, after going through its bear market correction, sat down here for about a year and has been accumulating in this tight range with an increase in volume for the last year or so, and is now finally starting to make a move to the upside. So Ripple is, you could say, essentially lagging right now. While Bitcoin is taking the reins and heading up, Ripple is still finishing its accumulation bottom before I think it's going to rip to the upside. But basically, many other alts, it's not just Ripple, it's not just Ethereum, are look like they've completely bottomed out from their bear market corrections and are now starting to make moves to the upside for the new bull run. So although, and as you can see, Ripple literally did a full retracement pretty much down to 24 cents, which was basically 27th. This was right before our last major bull run, right? So Ripple retraced pretty much 100% of that move. Really can't go much lower for this to be a continuation of a bear market. So with Ripple, you'd then expect it to go up and then come back down essentially to make even lower lows than what it's already made. There's really not much room to fall. So based off of everything that I'm seeing, although one can argue that there is a bearish case for Bitcoin and we haven't started a new bull run, and one should always keep in mind that anything is possible, I find it highly unlikely based on what I'm seeing on these other altcoins that really cannot see a significant, or should not see a significant correction anytime soon based on the wave structure that I'm seeing here. So that is my reasoning for why I believe that we have seen the Bitcoin bottom and that we are now well within the start of a new stronger Bitcoin bull market. All right. Now, if we zoom out again, my mouse is about to die. So, okay, so I might have to continue this video after I charge it up a little bit. But if we zoom out again, all right, we go to the 3 weekly chart. I want to show you guys something on the Brave New Coin Index, which is a price index that covers the entire history of Bitcoin since inception, essentially. And I want to show you guys something that I found very interesting. And it's not really a surprise, but it's something that you guys should really keep in mind, all right? So starting back from Bitcoin's inception at $0, I'm here on the 3 weekly chart, and I want to show you guys how things have played out with every massive bull market and bear market correction that has followed and what we tend to see. So I'm going to go ahead and mark off the high candle closes on this higher time frame before we saw our corrections, essentially our bull tops and our bear markets. I'm going to ignore the wicks because they vary from exchange to exchange, and so this number is going to vary depending on what your exchange you're looking at. But if we go with the high time frame closes, we'll get the same idea regardless, all right? So what I want to point out to you guys is that in any Bitcoin bull market or any cycle that we have seen, whenever we manage to clear and close above the prior highs on a high time frame, the move that follows to the upside is very strong and very drastic and very sharp, all right? And you're going to see where I'm going with this in a minute. But let's take a look at Bitcoin since inception. On the 3 weekly chart, we had our high 3 weekly close here at $17.42. We had our bear market that followed, and when the next bull market started, you guys can see the day that we got our weekly close, our 3 weekly high time frame close above prior highs, the next candle moved up almost double, and then we just shot up absolutely with an absolutely massive move to the upside, and we were well in the next major bull run, right? And that continues up until the candle close, the high candle close before the next major bear market. Here at $120, we corrected, and then we got our 3 weekly close above that level. We did have a little doji here that wicked below, and then what followed was again a massive major move to the upside that takes us to our next major bull market top here at $905. Again, we see our bear market correction, and then that ends all the way here. We get a close above, and then in the following weeks we go from $1,000 all the way to 20,000 to 20,000. That was the top of our last bull market. Our candle closes here at $14,000. So this is a level that we need to close above to go absolutely wild, right? That's the point that I'm getting at here. Currently, we have made a very quick move up to 10,000. Although 20,000 is our high, any high time frame close above 14,000 should send us up very quickly, very fast to new all-time highs, and quite rapidly after that to the next. I mean, it's going to be fast and it's going to be strong. We don't know how big the move is going to be, but conservative estimates, $50,000 for Bitcoin, being very conservative, very, very conservative, is not out of the question at all. All right. So what we're now in the smaller time frames, now that we've established that this is the level of interest that we want to get above and make a high time frame close above, what is the level below that we need to be paying attention to for a retracement? All right. In every prior bull market, we have seen significant retracements occur on the way up. All right. So a lot of people are seeing this ascent and they're saying we're not stopping till 20K. And I highly, highly doubt that. I think we're going to get a massive correction, 30 to 40%. It's going to be a buy the dip opportunity. And it's not to be dismissed. Don't get too excited and start leverage longing at these levels, because we're likely to see a correction. As hard as it seems to be, we're likely going to see one. Now, we didn't see the correction at 6,000 like I was expecting and many others were expecting. I was expecting an initial rejection off of 6K, a drop down to gather strength, and then us ripping through. Instead, we ripped right through it. So many are saying, oh, well, we're going to rip right through 11.8, or we're going to rip right through 13. It's possible. It's absolutely possible. Don't get me wrong. I just don't think it's going to happen. We need to see a retracement for this to be a healthy uptrend. We need to see significant pullbacks. We take a look at our run to 20K and we measure the pullbacks that we got along the way, and you'll see exactly what I'm talking about. So from here, we'll start with this pullback here, one of the more significant pullbacks. $3,000 down to 1,800 was a 37% retracement. All right. Then our next local top at 5,000 down to 3,200 was another 35% retracement. Our next local top here at 7,800 down to 5,500, another 30% correction. So we saw a 30% correction, a 35% correction, and a 37% correction on our way up to 20K. We will never go straight up. There always have to be pullbacks for a healthy uptrend. So I do expect to see a significant pullback soon. We haven't seen much yet, all right? In the way of pullbacks, all we've got so far was our first pullback of 20%. This was our next pullback of 10%. We got a pullback here of 10%. We got another pullback here of 20 or 17%. So the larger pullback has not yet arrived, all right? Which makes me think that we're still making our first larger wave to the upside, and the larger pullback, when we get it, will be our second wave down before a much more massive third wave to the upside, all right? So I do think that a larger correction is coming. And then we ask ourselves, well, what's the most logical place for that correction to occur, all right? So just based off of a traditional support and resistance level, if we take a look at the monthly chart, we can see this big monthly candle with a wick to the upside, a wick to the downside, and the next logical target would be to clear these highs of this wick before rejecting. So that's at 11.8K. I can't go down to the smaller time frames on this chart. Let's see if it's visible. I can't go down to the smaller time frames, but you can see that we had rejected this level 1, 2, 3 times, and then we obviously drifted lower and continued down to our low. So this is a historically significant level that was acting as prior support. We had these bounces off of it, and then once we lost it, we failed to reclaim it. So this is going to be a pretty significant level here at $11.8 thousand. And so that is my next area of interest. And the next one being, of course, that 14,000 level, which is our high time frame area that we're looking for a close above, right? So I am looking to see some sort of a rejection coming in soon. And then when we go down to the smaller time frames, we can see that we look to have completed our third wave here. We look to have got our fourth wave correction. And that would tell us that we're in our final fifth wave to the upside before we get some sort of a correction. So it makes sense that we would expect a correction here on the final fifth leg. And we're approaching this massive resistance. So my thoughts are we'll probably correct here at 11.8K. To add on to that, if we measure out a expected drop of 30 to 40% like we've seen in the past, that could take us back down to $7,000 levels. All right, so a 40% drop from 11.8K puts us at $7,000. A 35% drop puts us at $7,600, and a 30% drop puts us at $8,100. All right. Now, not pictured here and not visible here, there is a CME gap, a CME futures gap here at $7.2 thousand. Not saying that it has to be filled, but there is a gap here that may be filled, all right, around 7,200, between 7 to 7, it's around 7,200, yeah. It is around $7,200, right around this red block. It is also a level right below these lows that I had expected to be cleared earlier before this move up that we never got to, so we have some liquidity resting here most likely. And so I think that there is a gap here that will likely be filled. There's a gap at 8.5K as well, which I think will be filled as well. But I do think that it's quite likely that we see a move from a correction from 11.8 thousand down between 30 to 40%, and that matches up with that CME gap here at 7.2K. So I do think that we retest 7.2K on this major drop. That is where I'll be placing most of my bids to buy this dip. If we do lose 7.2K, then our 6K level, which is essentially a retest of this major support, is in play, and below that is this consolidation region between 5 to 5.5. That being said, a move down that low would be quite a significant drop from 11.8K. It'd be more than a 50% drop, I believe. Let me zoom out a little bit again. So yeah, that would be more than it'd be a 55% drop to get down to this region. So may or may not happen, all right, a drop of that magnitude. But what I do think will happen, which is quite likely, is a move down to at least 7.2K, all right. I think that this wick that we got here down to our 6.5K region could have been the only test that we'll get in the 6K region, right? So this level could have already been tested, and we may not get another test on that level. But I do think that the 7.2K level is yet to be tested, and I think that it will be, or it's highly likely that we will see that level upon rejecting 11.8K. If we blast through 11.8K, which is possible, then the next target would be this 13 to 14,000 region, and maybe we get our 30 to 40% pullback once we reach there. In that case, a 30 to 35% pullback takes us back to 8,000. Maybe that 8.5K gap gets filled here with a 40% retracement, all right? So that's another possibility if we break 11.8 thousand, but I don't think that that's going to happen personally, all right? In any case, you should be long with spot at this point. Plenty of opportunities to get in, and I think that when Bitcoin does make this larger correction, whenever it happens, coins like Ripple and Ethereum and all these other altcoins are going to have their time to shine as Bitcoin essentially consolidates for the next much larger leg to the upside to break new highs. So this is a macro overview of what I'm seeing here on Bitcoin and the crypto market caps as a whole. This is why I believe that we have started a new bull market to run to the upside, and we're making a larger five-way move to the upside, as opposed to this just being an A, B, C to the downside. All right. Just wanted to make a video to explain my thoughts because I'm getting a lot of people asking me about my thoughts about the idea of this being a B-wave correction within a bear market that is not yet completed. All right. So that is all I have for this video update, guys. I hope you enjoyed it. Credible Academy members, those of you guys who are in the Academy, will be keeping you guys posted with the shorter term movements as we go along, like we always have been. And so we'll keep you guys posted. I likely will not short 11.8K, but definitely a good place to be taking spot profits off. Debatable, but definitely a good place to be taking margin or leverage long positions off at these levels. And yeah, that's all I have for this video update, guys. I hope you guys enjoyed it. And if you guys have any questions, you know where to reach me. Feel free to comment on this on this post. And if you guys follow me on Twitter, you can DM me there if you have any questions. And you can follow me at Credible Crypto. I'll post the link in the description. All right. Hope you guys enjoyed the video. And yeah, that's it for